In the currency quadrant, taking a look at the March Canadian dollar future rallied to its highest percentage gain since December 14th of last year, bouncing off of a small basing pattern that has been forming over the last 5 sessions. The high today, 74.09.5, was up 0.7%. The low, 73.54, was only down. It was down about 0.1%, a little bit less than that, and we ended up closing on the day up almost 0.6%. That's where we were in the New York close, 7,400.5, which was up a little bit less than 0.6%. On a weekly basis, today helped to turn the Canadian dollar into a positive week, which would be the first in the last 4, at least so far. We're only at the midpoint of the week, and what could turn out to be only the second positive weekly close in the last 10 weeks. Now, we had an interest rate decision from the Bank of Canada today, and we had some Canadian economic data. The Bank of Canada left interest rates unchanged. That was as expected. Shortly afterwards, we were served the IV Purchasing Managers Index, which measures month-to-month variation in economic activity across Canada. It came in at 53.9, still an expansionary figure. It is a PMI data point, so it is 50 being the fulcrum between contraction and expansion, but it was lower than the previous reading of 56.5 in January. This data lined up with leaving rates unchanged, with the bank, which the Bank of Canada did. No hike and, of course, no cut in rates. These two economic drivers could have resulted in a weaker Canadian dollar, but we had some dramatic dollar weakness. The dollar is having its worst percentage day lower in the aggregate since also December 14th. U.S. Treasury yields have fallen in 3 of the last 4 sessions, weakening the dollar, which has fallen 4 straight sessions, helping to move the Canadian dollar higher in 2 of the last 4 sessions.